Let me ask you a simple question. Would you invest your hard earned money in a business without knowing how much it earns, how much it owes, or whether it is even making cash? Sounds risky, right? But here's the reality. Most people invest based on tips, news, or market noise without ever reading the company's financial statements. And that's exactly how wealth gets destroyed. Because behind every successful investment, there is one skill: understanding financial statements. Welcome to Facts, where we simplify finance strategy and real world business concepts. Think of financial statements as the medical report of a company. They tell you whether the company is healthy, whether it is growing, whether it is overloaded with debt, and whether it is actually generating cash. Because profits can be manipulated, but cash rarely lies. If you don't read financial statements, you might invest in loss-making companies, miss hidden risks, or fall for hype instead of reality. And in the long run, markets reward knowledge, not luck. Every company reports three key financial statements. The first is the profit and loss statement, which shows performance over a period. The second is the balance sheet, which shows financial position at a point in time. The third is the cash flow statement, which shows actual movement of cash. Think of it like this: profit and loss shows performance, balance sheet shows strength, and cash flow shows reality. Let's start with the profit and loss statement. Here, the first thing to check is revenue growth. Is the company growing consistently, or is growth volatile? Next is operating profit. Is the core business profitable? Then look at margins. Are they improving or declining? And finally, net profit. Is it increasing over time? Some red flags to watch out for are high revenue but low profit, sudden spikes in profit, and inconsistent growth. Always remember, growth without profitability is dangerous. Now let's move to the balance sheet, which is often ignored but extremely powerful. It answers one simple question: what does the company own and what does it owe? Assets are what the company owns, like cash, inventory, and machinery. Liabilities are what the company owes, such as loans and payables. Equity represents the shareholders' ownership. Here you should check debt levels. Is the debt too high? Look at the debt to equity ratio to understand whether the company is over leveraged. Also, check working capital to see whether the company can meet its short-term obligations. Red flags include rising debt without growth, high receivables where cash is not coming in, and weak net worth. Many companies look profitable but collapse due to poor balance sheet strength. Now comes the cash flow statement, where smart investors focus. This statement tells you the truth. It has three parts. Cash from operating activities shows whether the business is generating real cash. Cash from investing activities shows whether the company is investing for growth. Cash from financing activities shows whether it is raising or repaying funds. What you should look for is positive operating cash flow, consistency over time, and whether cash matches profits. Red flags include high profits but negative cash flow, heavy dependence on borrowing, and continuous fundraising. Always remember, profit is an opinion, cash is a fact. Individually, these statements are useful, but together they tell the full story. An ideal company shows growing revenue, a strong balance sheet, and positive cash flows. Warning signals include profit without cash, growth funded by debt, and weak liquidity. Smart investors don't look at one number, they connect the dots. Here is a simple five-step framework you can follow. Check revenue growth, check profitability, check debt levels, check cash flow, and look for consistency over 5 to 10 years. That's it. No shortcuts, no tips, just fundamentals. Investing is not gambling, it is understanding, and financial statements are your biggest advantage. If you can read them well, you can avoid bad investments and identify wealth creators early. This is how informed decisions are made. If you found this useful, like the video, share it with someone who invests and subscribe to Facts. And comment below, do you currently read financial statements before investing?